forecast factor. Could weather prevent holiday shoppers from taking part in the last-minute rush? In today's cover story, why changes are taking root in the U.S. grain market, plus overworked and underpay is becoming more common in the labor market, and get into the Christmas spirit with Traders Unplugged, what the guys are stuffing in their stockings this year. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Happy Friday, everybody. I'm Angela Miles. It's December 19th, and our first look, here comes Santa Claus. The stock market turns into an early gift for investors, with the Dow having its biggest one-day rally in 3 years. The blue chips raced up 421 points Thursday, the NASDAQ 104, and the S&P 48. Gold gained $4, and oil took another hit, falling below $55 per barrel. A J.P. Morgan economist suggests Texas is at risk of recession as crude prices crumble. And in the after-hour session last night, investors kicked Nike down almost $3. The athletic shoe company topped earnings estimates, but upcoming orders showed signs of weakness. Time now for Trader Talk this morning, and Ira Epstein of the Lynn Group is joining us. We have our music out for the holidays. Is it time for investors to get on Santa's sleigh, Ira?
They better be on that sleigh, because it left the train station yesterday. Right after that FOMC meeting, there's no more data through year end that can really derail this in any way. So now what you've got is a market that is looking at, yes, the potential, the wording change that might mean April to June, the potential for the Fed to raise interest rates. However, I'm not in that school of thought. One of the mandates of the Fed is inflation. You have no inflation, so to speak. So if you're going to sit here and raise interest rates to kill inflation that doesn't exist, you're going to drive it down even further. So I think that what the traders realize is that without that, and with the Fed still playing with words, but not coming to the table to do anything, there's time to still be long, and the Santa Claus rally is on.
What do you expect for trading today? We've had some big volume.
Yeah, I think that right through the end of the week, we'll get more. The volume is strong as can be. The window dressing impact has probably begun right now. And window dressing is when things that you didn't want, you're getting rid of. Things that you do want in your portfolio, you're putting on. There'll be more of that right through year end. And remember, a lot of traders start going away over the next week. So you're now in that Santa Claus rally time. And to take advantage of it, you've got to be selective here. Understand that some of these markets, such as the Dow, probably have the 18,000 area in their sights. Now, whether they hit it or not, who knows? All the market has to do is hold up, and you'll say you've got your Santa Claus rally.
And happy holidays to you.
You too.
The biggest boost to the economy could come from consumer spending, especially this holiday season as gas prices drop. Bernie Rayno of AccuWeather joins us with a forecast. Bernie, how's it looking for retailers and shoppers?
Yeah, Super Saturday. Weather should be pretty nice. A couple of areas we have to be worried about, though. The Pacific Northwest, rain, wind, and also all kind of travel delays. And that rain will get down into Northern California, but stay north of San Francisco. There will also be a little bit of rain across parts of the Mid-Atlantic states, but it should be relatively light. In between, weather looks pretty good. There shouldn't be too many travel delays, and you should be able to get everywhere you want to go without much worry of the weather.
Thank you for that update, Bernie.
My pleasure.
Chuck Coppola steps in now with a new worry for retailers. Chuck.
Retailers are under the gun for selling banned toy weapons online. New York regulators sent notices to Walmart, Amazon, and Sears to stop selling plastic versions of assault rifles that are considered too realistic. The items must contain an orange stripe on the barrel to indicate that they are fake. According to New York's Attorney General, at least 4 people and a 12-year-old boy have been killed as a result of holding toy guns that were mistakenly thought to be real. Walmart and Sears say that they are removing shipment of the toy guns sent to New York stores. Amazon was not available for comment.
Businesses perking up this Christmas at Starbucks. The coffee chain expects to set a record in sales of its gift cards on Christmas Eve. Starbucks cards launched 13 years ago. Since then, $20 billion have been loaded onto them, making the cards one of the chain's most profitable plays. The National Retail Federation predicts 8 in 10 shoppers will buy gift cards this holiday season. Starbucks expects to easily sell more than 2 million cards to last-minute shoppers. That translates to 1,500 gift cards per minute.
In our cover story, corn exports have increased in 4 of the last 6 weeks, and that trend may continue. The surge in demand comes as livestock herds increase and China agrees to accept genetically modified corn. Analysts say U.S. sales of corn are going up due to increased demand domestically from producers of cattle, hogs, and poultry.
We are seeing a rebuilding of herds. Hog numbers are on the rise again after some real health issues over the last year. Cattle numbers are starting to slowly turn the corner and increase a little bit.
Corn exports may also rise on news of Ukraine failing to meet contract demands to deliver corn to China this year. And more problems in China, millions of tons of corn rotting in the fields.
Our chances to do some business with them either way has just shot up tremendously here in the last 24 hours or so.
And a big boon coming to U.S. corn producers. As part of trade agreements announced last month between President Obama and Chinese President Xi Jinping, China will accept genetically modified corn developed by Swiss agrochemical company Syngenta. Since last year, China has rejected over 1.2 million tons of it. The GMO corn seed was at the heart of a lawsuit brought by ADM, Cargill, and others, accusing Syngenta of falsely claiming that the corn would be accepted.
The U.S. and the Chinese negotiators were able to get together. We know that they've worked hard on some pollution deals that seem to be moving and made some accords there, and it looks like that's led to some further opening of the Chinese market again to U.S. corn.
Already, China is the biggest buyer of soybeans and cotton from the U.S. This week, trade talks in Chicago between Agriculture Secretary Tom Vilsack and Chinese officials extends trade further. According to Hua Wenfeng, senior researcher at Beijing Orient, all the infrastructure and logistics facilities are in place, so a large part of China's future corn imports will be from the U.S. Shares of Syngenta rose 2.6% this week on reports of the corn agreement between the U.S. and China. It closed up at 64.38.
Now onto Russia, where President Vladimir Putin is reassuring his nation the economy will rebound following the drastic decline of the ruble this year. The ruble has tumbled 45% as the dollar has surged. Putin blames the West for his country's dilemma, calling it a perfect storm of low oil prices, Western sanctions over Ukraine, and global financial problems. Putin has become more popular in Russia after the annexation of Crimea. U.S. companies, however, are losing faith. GM is the latest. The car company is halting deliveries of cars to Russia as the ruble rumbles lower.
Ford is expanding its recall of defective Takata airbags to more than 500,000 cars nationwide. The recall includes more than 500,000 Mustangs from model years 2005 to 2008 and about 2,000 GT models from 2005 and 2006. The car maker was one of 5 asked by the National Highway Traffic Safety Administration to recall cars equipped with the airbags, which have been linked to 5 deaths. On Thursday, Takata took an ad in U.S. and German newspapers saying that it was deeply saddened and would comply with regulators.
A CEO in the real estate industry is giving back his bonus. According to Fortune.com, Rick Holley, CEO of the real estate investment trust Plum Creek Timber Company in Seattle, is returning his nearly $2 million bonus. He says he doesn't deserve it unless stockholders see an increase in their return on investment. Plum Creek shares hit an all-time high of $54 back in May of 2013, then tumbled to $39 in 2014.
A former Countrywide executive is collecting a $57 million reward. Edward O'Donnell will receive the massive whistleblower reward for turning over information about Bank of America's bad behavior leading up to the financial crisis. O'Donnell exposed B of A's defective mortgages. The bank's paying a $16.5 billion penalty for the bad loans.
Payday lenders are paying big money to push back against regulations. Since the beginning of 2013, payday lending companies have spent $13 million on lobbying and campaign donations to at least 50 lawmakers, according to a CNN Money report. Federal regulators have been criticizing the short-term loans, which include huge interest rates in exchange for cash. Last year, the Department of Justice launched Operation Choke Point to crack down on payday lenders.
The stock connected to Warren Buffett wipes out $1 billion in market value in just one day. Shares of BYD, a Chinese electric car company, fell 47% yesterday. Shares bounced back slightly, closing down 29%. The company is backed by Warren Buffett's Berkshire Hathaway. BYD says it could not explain the sudden loss, but says it is closely monitoring the situation.
In our IPO watch this morning, Juno Therapeutics debuts today. The biotech is developing various cancer treatments. Shares will likely be offered between $21 and $23. The company will trade under the ticker Juno. And yesterday, investors welcomed biotech Bellicum Pharmaceuticals. That stock rallied 25% in its first day of trade.
Carnival Cruise scores big with a Super Bowl spot. The cruise company will appear in a Super Bowl ad for the first time ever this year. Carnival has been working to restore its image following a big PR blunder in 2013. That's when its Triumph ship was stuck at sea for days after an engine fire. Carnival says it'll have viewers choose the theme for its ad on social media. The big game airs on February 1st. No word yet on how much those spots are costing companies this year. Carnival shares dipped 11 cents yesterday.
Checking the earnings calendar for today, it's BlackBerry, Carnival, Finish Line, Paychex, and CarMax. Still to come is betting on oil, a slick move. Our traders tell us the real deal in Traders Unplugged, plus how companies are finding loopholes to get you to work more hours for free. And will Uber go to extremes to screen drivers? Has had its share of trouble this year, and now the online-based cab business is considering lie detectors in the screening process of its drivers. An Uber driver in Boston was charged with kidnapping and raping a customer. Uber said he passed a background check. The Boston Globe reports Uber is working with investigators. Bill Mueller joins me now with how companies may be getting you to work for free.
Each day, just before they go home, workers at Amazon are required to spend about 25 minutes going through a security screening to be sure they're not stealing anything. Should the company pay them for that time? Well, the Supreme Court recently ruled no. Doesn't that sound kind of unfair? In fact, it's just one of the several non-work demands that employees often have to endure, and often without compensation. Let's talk with business attorney Kristen Prinz. She's the principal of the Prinz Law Firm. And this was a unanimous ruling by the court.
Yeah, it was pretty unusual. It was drafted by Justice Thomas, and he said, hey, this isn't a requirement necessary for the employees to perform their job, so it's not compensable.
So that's the language that determines whether or not there should be compensation, whether it has anything to do with the job.
It's been vague for a while. A lot of people would have said if it's for the benefit of the employer, it should be compensable time. Obviously, a security screening to see if your employees are stealing from you is for the benefit of the employer. So I think it does add some clarity now that really it has to be specifically related to the job duties.
Okay, give us some other examples of where employees are required to do things, but they're not paid for that.
Sometimes it's standing in line, punching in. If there's a big rush to punch in and punch out at the end of the day, that would not be necessarily compensable. Or if an employee is required to wear a uniform, but the uniform is really not required for performing their job, that could be not compensable.
So like an Ebola nurse has to put on all that space gear, and that can take, I don't know, a half hour or more to put on. They're not paid for that.
They would probably be, most nurses are going to be exempt, but if they're not exempt, they probably would be paid for that because that would be central to performing the duties of the job. So.
All right. Well, you said it's somewhat gray, but you think there should be a line that companies would be able to see and know I can't cross that line and force them to do something and not pay them for it.
Yeah, I mean, there should be a line. Clearly, they're trying to make a little bit more clear line, but there has not been a clear line. And I think the most surprising thing about this case is that these are low-wage workers, and Justice Thomas said, hey, this is something that they can bargain for. Well, usually low-wage workers don't have any bargaining power.
Unless they have a union, but how few are members of unions these days?
Less than 6% of private employees are unionized, I believe, right now.
Yeah, so the higher-paid employee can negotiate that, but typically not the smaller.
Yeah, and what's very funny is that higher-paid employees now are being found to be non-exempt, and they're getting overtime. They're getting compensated for things that in the past they might not have been compensated for.
Kristen Prinz, thanks so much.
Thank you.
Thank you, Bill. Amazon is upping its game in the delivery business. The Wall Street Journal reports that e-tailer is zipping items around New York City. The new service is called Amazon Prime Now, and products are being delivered within 1 hour purchase online. Coming up, cruise control. Is Carnival in ship shape for investors? And why the guys might want coal in their stockings this year. Traders Unplugged is next. way to cap off a week is with these handsome guys, Alan Uckman and Scott Chelledy, who are ready to go toe-to-toe in Traders Unplugged. Good morning, guys. Round number 1, big oil. Of the top 10 oil companies, pick a play.
The sector's down 30%.
Yeah.
Dropped a long way.
Fantastic, Professor.
I'm not smart enough to pick the individual stocks, so to spread out that risk, look at XLE, the ETF that tracks the whole sector. Look for a bounce. A bounce here to the halfway point of this huge sell-off. Could be another 10% move to the upside. We saw bullish divergence this week, new lows and a higher close.
I can start using the beginning of what you just said. The sector's off 30%. I'm not smart enough to pick any one single stock, so I'm not going to pick any.
So you agree?
So I'm not going to pick any. Why do you want to get people involved in the middle of a meltdown in oil? Oil, the energy sector, if this was 2008, I'd have something to say.
But it's not 2008.
It's 2014, so stay away.
Round number 2, market meat grinder. Ground beef prices are at an all-time high. How will this end?
I'm sure Alan knows this because he's done a lot of farm work. You can tell by his physique. But high prices will cure high prices. We can't reproduce cows as quickly as we can, say, hogs. Reproduce cows as we do hogs. They don't reproduce as quickly. So high prices will cure high prices. This will take care of itself.
Eventually.
Herds were at all-time record lows or 50-year lows last year or this year. So it's something that's just going to work its way through the system.
So the answer is time.
The time will cure, yeah, absolutely.
Just like when oil prices were too high, eventually they invented new innovations, new technology, and so forth. The message of this was that meat grinder. Meat grinder here. The market meat grinder is the last week or so. We've had some craziness. Volatility has been at extreme levels. We had the VIX go up 100% in 5 days. So it has been a meat grinder.
What about beef?
But like you said, time will cure everything.
Yeah.
Time will cure the volatility in the markets. Time will cure beef. There we go. Full circle.
Round number 3, cheers to Santa Claus and the Santa Claus rally. But will investors find coal in their stockings this year?
I like coal. That's the whole symbolism here.
You have to, because that's all you do
Coal's
get.
down 25%. BTU is an $8 stock. Again, it's part of the energy sector. I think risk reward puts it on.
I get to play on words.
How much further can it go down? Oh, so you're looking for a Santa Claus rally. You have a choice: coal or Santa Claus rally.
I'm not looking for a Santa Claus rally or coal.
No, you can't say neither. You can't say none.
No, we're going to go into the next year. I was going to answer the question literally. We're going into the next year with a lot of volatility. Oil will still be in the forefront. 2/3 to a half of all the S&P 500 stocks have some sort of energy sector in them, revenue part of them. So it's going to be affecting everything we do for the next 3 to 6 months.
In a good way.
No, it could be a bad way. It's going to be very volatile.
Only 8% of the S&P is made up of energy now.
Yeah,
it used to be 14%.
But
so 92% of the
But we use energy in a lot of things we make, Alan.
Right, but it's lower energy prices. 92% are going to benefit.
Yeah, but the prices are going down, so it's a deflation killer. It's a bond killer. It's deflationary. Watch what happens.
Happy holidays.
We're not raising rates next
Happy
year,
holidays.
and we're going to have QE in 2016.
On to your bonus round question. 9 stocks have doubled or tripled this year in value. Name one: Amazon, Marriott, or Under Armour.
It was Under Armour last year. I'm going to say Marriott.
Yeah, it's not Amazon. Marriott.
Marriott and Under Armour.
Oh.
Cha-ching.
Trick questions.
Well,
Enough of the trick questions.
You did fine. You named one. I said name one, and you did. Thanks for coming on the show, guys. First Business continues right after this. Talk this morning, Jolly James Romali of Option Hacker joins us. And James, Carnival Cruise coming out with earnings this morning. Will there be rough seas for this stock?
I actually think that Carnival is setting up pretty well for a long position here going into earnings. Historically, they perform relatively on a mixed basis. They've sold off 4 times and rallied 4 times over the past 8 quarters. However, we're seeing a lot of bullish price action in the stock leading into these earnings. And I think a lot of that has to do with the fact that we've seen lower energy prices for a couple of months now, and that's been a huge rebate to the American consumer. And consumers that have been surveyed say that one of the things that they might spend that extra money on is vacations. So we might not see anything come through in this quarter's earnings, but it definitely should help guidance from CCL. They're implying around a $2.50 move off of yesterday's close, which is around 44.5. So I think $47 by today's close is definitely in the cards.
James, are you surprised by the comeback in the cruise line sector? Royal Caribbean is one of the top 9 hottest stocks of the year.
No, I'm not all that surprised. I mean, these are stocks that you would expect to do well in a good and growing economy. I mean, if the consumer is doing well, they're going to be interested in taking vacations, going on cruises, and we would expect to see the earnings of these companies move higher. And I think that's what's going to happen in CCL, and I think that's what we're seeing happen in Royal Caribbean as well.
Thank you, James.
Thank you.
Well, that's it for now. Coming up on Monday, shake it off. Why it pays to forget the past and take a fresh look at the stock market in 2015. From all of us at First Business, enjoy your weekend.